it's a sort of a Jekyll and Hyde situation, really and truly, because you read today that banks are really adopting blockchain as a technology, and sometimes, journalists convolute virtual financial assets with blockchain, and unfortunately they're bundled into one bucket. It's not the case. Blockchain is the technology, virtual financial assets are a product based on that technology. And in fact, the reality is that there are very few banks servicing virtual financial assets. We're talking about Bitcoin and the other hybrids of virtual financial assets that are being touted on the market. In my view, once the regulations are in place, and there's a lot being done at ESMA level, at EU level, to put a regulatory framework in place to allow banks to service and intermediate these type of assets. But up until those regulations are in place, and banks can really tailor the required processes and procedures to service those assets, I think banks will remain sitting on the fence. There is a lot of merit in virtual financial assets. I believe they're here to stay, and particularly the tokenization of securities, even the tokenization of fiat currencies, there's really scope for that. But up until the regulations are in place, particularly AML-driven regulations, for which banks are being very heavily fined for inherent weaknesses they have in their systems, I don't see the banks really running to service this particular sector. I think if you look at the state of play today, the banks are facing a bit of a tussle, right? Because on the one hand, they're being pushed by the EU to finance SMEs and allow SMEs and startups, to operate and give them banking services, give them credit facilities. On the other hand, if you look at the Capital Requirements Directive and the inherent regulations supporting that, banks are penalized if they are extending facilities and credit to institutions where they have no suitable coverage. So I think the Capital Markets Union is a solution to this, because in a way it's allowing the likes of crowdfunding platforms and instilling increased liquidity in the marketplace, to allow these companies to come to the market. What we have here in Malta, for example, prospects, right? Where you allow these entities to seek financing in the non-traditional manner, which was simply knocking on the doors of the banks to seek financing. And I think this disruption will allow for the ease of movement of capital from investors directly into these companies. Now, investor protection in this context is very, very important. So not all investments are suitable for widows and orphans. And I think there's an increased heightened sensitivity around that. I think the challenge in the space, and particularly in so far as the Capital Markets Union is concerned, is to ensure that there is this balance between the assets that are being brought to the market, in front of investors, and the actual investors that are eligible to participate in these type of assets. That will be a very big challenge, that will need to be hopefully overcome within the next 9 months. And so finally we'll have the Capital Markets Union fully functioning.